If you want to be a better investor, I think this whole idea of like entrepreneurs and your audience are going to be entrepreneurs. They're going to be, franchisees. They're either buying existing or starting new, right? So it's a much more of an entrepreneurial mindset. Entrepreneurs feel like they can just figure it out. Whatever the situation is, I'm gonna make it work. We're gonna pivot if we need to. We're gonna get, we're gonna be um, really aggressive with spending money here, really tight with what we spend on expenses, right? They're just going to find a way. Investors, it's like a totally different mindset. It's um, how do we not lose money?
Representing Franchise Secrets, Erik Van Horn.
What are we talking about? We're going to talk about some active to passive. Let's talk about like state of the economy, the state of the world from your lens right now. I always love talking to you about that. Like you have such a perspective as a good friend of mine, but as a guy that just studies single family offices, multifamily offices, all the reports that come from all the big players out there. Like when you do it in the mastermind and ever like just in small groups, like I love it when you are just dropping knowledge. So like from your perspective today, like what are you seeing out there in the world that could help some business owners and passive investors?
Yeah, thanks for the kind words. It's interesting. I mean, I feel like I've got no real knowledge or insight of what's going to happen. Like whatever I think may not be the reality of what ends up happening, right? But I think if you study enough data, whatever does happen, you probably in those moments then can make smart decisions, right? So, I mean, I don't know what's going to happen with interest rates or with tariffs or whatever else. I mean, we've got the largest wealth transfer in the history of the world that is happening right now as we speak over the next 15 years or so. So there's a lot to be paying attention to. I mean, when you think about who is inheriting, you know, I guess experts say 75 trillion to 105 trillion. So who's inheriting it? Well, it's millennials from baby boomers. And um, if you want to know, where a great investment is going to be, what do millennials like to do? How do they like to live? How do they like to shop? How do they like to work and study and play and whatever it is? Like, what's the technology that they like? What's the what do they like from a health and wellness standpoint? So it's like I don't know exactly what's happening, when it's happening. I don't know the impact of interest rates, but as certain things, it's like that's more of like a macro view of like over this time, I think these things are going to happen, or I want to pay attention to the trends of millennials. But I also think that we're going to see, real estate hopefully kind of has a reemergence, but if we don't see a lot with interest rates, I mean, there's still a lot of distressed real estate out there. So, it's going to be interesting to see what happens there. I do think, well, I'll leave it at that for now and we can dive in a little bit more.
So I think franchisees, franchisors, buyers should be listening to this not only from like an investment standpoint, but from a like, where's my franchise? How is my franchise positioned over the next 5, 10, 15, 20 years? And this is what we do all day long. Like I was on a call with one of my partners and we are looking at this in this one industry and he's was challenging me with some data. He's like, Erik, there's no reoccurring revenue here. This is all like you eat what you kill. This is, he's giving me all of these different things. Where are the barriers to entry? What do we see as macro trends? And so we look at all that. And when so I want, you know, the audience to look at it from these different perspectives, not just like, oh, where do I put some of my money to make money for me, but like, where am I investing my time in my businesses today? Because you might be in a business and it's towards the tail end of its life cycle. You might not realize it yet. Hindsight's always 2020, but be thinking about that about your business, even if you think everything is great. Because 3 years ago, everyone still thought software was great, and software is just getting hammered right now. So you just need to be looking at a lot of different things, and where's private equity putting money into. So I just wanted to bring that to the audience so you can listen to this podcast from multiple different angles and learn. You were saying macro trends. Have you always been someone that really looks at the macro trends, and or is that becoming more important as you have more years behind you as an investor? Because I think sometimes it's easy to chase these the quick things that are going up or down, and chasing more micro stuff versus macro stuff that has been, you know, seen cycle after cycle over generations. So just some, I've never asked you that question before, but as you study stuff, how has macro, has it always been the same for you or has it changed?
Well, I think it's changed, and I think the more I study history, the more I have like a better understanding of what could happen or what has happened in the past, and how different economies, different nations, different sectors or companies dealt with the turbulence that exists or existed in those scenarios. So, for me, I think it's interesting. Um, I think that the bigger of a view, the longer term that you look, the more opportunities you're going to have, and also the less emotional decisions you're going to make. So, if I'm looking at the spikes in the stock market or the drops in the stock market or in Bitcoin or in whatever on a daily basis or an hourly basis, that's going to create more of an emotional reaction versus if I've made a decision over a 5-year hold, a 10-year hold, or at least a 1-year hold of what I'm going to do with a certain asset or a certain asset class. That makes it a more logical decision than emotional decisions. And then also, I just think the more I read today, the better I am at actually identifying what a macro trend might look like. I don't even know if I even gave it a whole lot of thought in my earlier years. But I think if you study enough data, you can see and keep in mind, like I wouldn't even consider this a macro trend, but if you study the data of emerging markets and what isn't yet mainstream but becomes mainstream, I mean that's not a macro trend; it is a micro trend. It can become a macro trend, but I like being on the cutting edge of that sort of thing. And I don't always get it right, but I've gotten it right a lot, and that's been helpful. I got it right with single family home rentals early on and kind of the institutional grab of ownership there. So that served me well. I got it right with mobile home parks very early in my investment career. Got it right with a handful of things like defense tech, robotics, AI, even in the early days. Not even now it's the buzz, but before it was cool to invest in it. These are things that I was studying and kind of geeking out on. So I think that there's an intuition part of it too. If you are reading enough and if you're around people that are outliers that are doing things at another level, I think it's going to give you some insight to some possibilities that maybe aren't mainstream yet.
What were some of the best investments that you've made that you look back on? Not just like making money monetarily, but like you look back and be like, this was just such a great investment. How much of that was luck? How much of it was timing that you fell into? How much of that was just like great Justin Donald, the lifestyle investor decision making?
Yeah, I mean, I think I've had plenty of luck in my life. I think sometimes things fall into my lap at a certain time, and had it fallen in my lap a few years earlier, a few years later, it would have been a totally different story. But I do really trust my intuition today. I've got really smart people around me, and I bounce ideas off them. I don't want to live in an echo chamber. I want to live where people are going to openly debate, what I'm thinking or my thought patterns. I want that diversity of insight and expertise. And for specific investments, I mean, mobile home parks have been very fruitful for us because they've provided cash flow, but they've also grown in value over that time. I mean, I got into multifamily and did pretty well with that, and got into industrial and did well there, and early days with self storage and did well there also. But some of my biggest returns have been, um, probably sure things in the private equity space, or I would say I've gotten lucky on some early stage things that have turned out. We've got a handful of those that are likely going to exit here this year, and I've got a deal that's going to close in 10 days, 11 days. That I'm really proud of. That was kind of created almost out of thin air, but it's going to be a 7-figure exit with assets that most people wouldn't even consider valuable or that valuable. So I'm really proud of that one.
So now, like, given all that, go back to like either your earlier self or speaking to the the entrepreneur, the seasoned or new entrepreneur that's wanting to start investing their money in more passively. What advice would you give yourself today if you were just starting out, or maybe give somebody some advice that is like, I've never put $50,000 into an investment and just, walk away and it's fully passive. Somebody else is managing that project, that company, that money. What advice would you give that new investor?
Well, I'd say it's hard to make good returns if you're not in the game. So, I mean, I think we've got to get in the game first and foremost. But I also think who you partner with, who you get in the game with, really matters. And I think if you're investing with people that have less than a decade of experience, the likelihood of having poor outcomes or unexpected negative returns is probably a lot higher than a team that has been around for 20 years, that has probably weathered at least one or two financial crises, if you will. And so, yeah, who really matters in partnering with, the jockey matters a lot more than the deal, in my opinion, but both are important. But having the ability to learn how to vet them, learn how to vet the deal, and then find groups that you trust that you can do additional deals with, and look at the track record and how many deals have they done, and of those deals, how many performed at or above the pro forma. So like you got to do your homework, but once you do that, you're not going to be able to get a return until money's in the game. But keep in mind, there's two different ways to do it. I mean, you could do it yourself. You could just buy deeded real estate. You could buy a business. You could take those dollars and invest it that way, and you might get a higher return. You might not. Or you go with the seasoned professionals that know what they're doing, and maybe you don't get as high of a return if you nailed it on your own, but you get a darn good return if it's a good group without much of your time. I mean, really the only time invested is the diligence on the front end to figure out if you want to invest. And then, really it's just like digging into the quarterly investor updates.
I want to dig into like who, like the sponsor, person behind the deal, how important that is, and how long they've been in the game. Because somebody that hasn't invested money before will be like, that makes a bunch of sense. I'll follow that advice, Justin. If Eric's listening to Justin, Eric knows Justin, I'm going to follow that advice. And then, like, reality hits. They get deals put in front of them. How, like, there's not a lot of people that have been in the game for 10 years and you haven't really, you know, able to do really enough due diligence on them by yourself. So the who is really hard to figure out if you don't know somebody that knows them. And then how long they've been in the game is they haven't been in the game that long. Most of these people out there raising money. So like dig a little bit deeper into that for the person that it makes a bunch of sense to right now as you say that, but then they get 5 deals put in front of them a year from now. And do you think most of them are going to be with a great sponsor? The who is great and the how long they've been in it is long enough?
Probably not. I mean, I would just assume most deals you see are bad. If you want to be a better investor, I think this whole idea of like entrepreneurs and your audience are going to be entrepreneurs. They're going to be, franchisees. They're either buying existing or starting new, right? So it's a much more of an entrepreneurial mindset. Entrepreneurs feel like they can just figure it out. Whatever the situation is, I'm gonna make it work. We're gonna pivot if we need to. We're gonna get, we're gonna be um, really aggressive with spending money here, really tight with what we spend on expenses, right? They're just going to find a way. Investors, it's like a totally different mindset. It's um, how do we not lose money, right? This deal is a bad deal unless I can prove otherwise. Entrepreneurs go in and say, this is a great deal. Let me see if there's any reasons I should not invest, versus, a seasoned investor is going to go in and say, I'm not investing in this. This is garbage unless I can prove otherwise. And I think just that single distinction can be the difference between making a good amount of money and losing a good amount of money. So that way you say no to more deals, you say no to more sponsors, and you really do the hard work of, the diligence you need to make sure a group's good, or get involved with communities, with investment groups, with masterminds where they are good. And I'll tell you, most groups don't do a good job. I mean, I live in this world and I see the deals in the groups that I'm in, and I wouldn't invest in virtually any of them. But also realize as an investor, you're going to do bad deals. I've done my fair share of bad deals. You learn a lot from it. It never feels good in the moment, but it certainly educates you and sets you up for success in the future if you learn the lessons.
And just to hone in on that for a second, like I've lost money on deals too. And I've had conversations with Justin about deals that have gone south in general. And I know like we've had very painful conversations, like real conversations. So it's not like, oh, there's pain. Like when Justin says he had pain, I say I have pain. Like there was pain in those deals, and you've got to learn from them. Just like an entrepreneur, just because a business didn't go well, like an entrepreneur is going to get back and do it again, and they're going to eventually do well. But a lot of people that aren't cut out for entrepreneurship, they're going straight back to get a W-2 job, and that's where they're going to live. As an investor, you need to learn how to be an investor. It sounds so simple what Justin's saying, but I promise you, like the layers underneath the simple things that he's laying out there just go so deep. And we've experienced it in the mastermind that we have together. I've experienced it watching Justin lead the lifestyle investor mastermind, and how people with many millions of dollars to invest would go in there, not invest anything their first year, just to learn. And it'd be interesting to pull back and see those that are quick to invest versus those that are slow to invest, that are quick to learn, slow to invest, that are quick to say no, slow to say yes, to see what kind of overall returns that they get year over year, at some point in the future.
Attention, franchisors and franchisees. There are two really important resources that I want to share with you that will help you avoid costly mistakes and increase your enterprise value. The first is our free Facebook group. It's a community that has over 4,000 franchisees and franchisors in it. When somebody asks a question, they get honest and authentic answers from multiple perspectives. You can join the group for free over at franchisesecrets.com/Facebook. The second resource I want to share with you is if you're a franchisee and you want to be around a community of successful Zs and other brands and in other industries, this is why I created the Franchisee Mastermind. If you want access to the best single and multi-unit owners to know what they're doing, or if you want to be around other multi-brand owners, then you'll want to check out my Franchisee Mastermind. The reason why people join is they want access to my Rolodex, my connections, to each other. They want a shortcut success, both short-term and long-term. Links will be in the show notes or at scalablefranchise.com.
I want you to give some free resources out. I know you have them, like they're out there. I don't know if you know the website that they're on or whatnot, but as you were just talking about some things like a checklist and vetting things out and, investor criteria and all this stuff. Do you have some resources where people can go? And also talk about the free community that you have, because not only do you have these masterminds, you have a free community that you are giving, like, you have great speakers come into and they engage with that community. So you're giving away for free what most people charge a lot of money for. So like give the audience give them some goods, man.
Yeah, I love it. Well, we've got a number of things that we're super excited about. Obviously, this open community has been awesome and it's grown. I mean, we grew to over 2,000 people last year, which is just incredible to think about. and and so, of course, we have the different masterminds. We have three different masterminds: Lifestyle Investor, Tribe of Investors, and then our young adults program called Foundations. But from there we have our open community that a lot of people dig into, and it's just a great group. It's just a great resource. So a few places to go. If you go to lifestyleinvestor.com, everything's there. If you go to lifestyleinvestor.com/consultation, we can do a free consultation. It actually, normally we charge 500 or 495 bucks, but we'll do this free, a free call with anyone that reaches out. So lifestyleinvestor/consultation. There are a bunch of free resources, I think, at lifestyleinvestor.com/free gifts or /resources
Should
or
be like
resource.
/free
Yeah.
resources. That's what it should be.
Yeah.
Like a
Well,
bunch, it
and
should be
maybe
forward
it's
slash a
that.
bunch of
I
free
think we are
stuff.
split testing a couple things. So it might work under both of them.
But here's the deal.
And
Get
then
into the community. Go to the free community. Go to lifestyleinvestor.com and there's stuff on there. Just get into Justin's world. I send my friends there all the time. And I don't normally like people are going to listen to this and like, Eric, why are you pushing this so much? It's because I know when someone gives a lot to the audience and I send my friends places to help them, like I want to be able to give that to my community. So that's why I'm pushing this, because most people they're emailing me, asking me stuff. I'm sending them to Justin's free resources because there's so much of that. It never used to be like that. You didn't have this much free stuff out there, but you
no, we've got a ton. And by the way, we can link in the show notes the link for the open community. We'll have
yeah,
to get
we'll
that
get it out there.
from the team. I can't remember it offhand.
We'll get it out there. And you shouldn't have to remember all that stuff. I mean, Justin, you've created a great lifestyle. You were just on a great vacation. You and I were talking about that. And like you and I were talking about one of our friends that just lost his life. And my comment to you was like, he was a front row dad. He wasn't an actual front row dad, but he's a guy that his life was about his family, his faith, family, and then business. That was
Yeah.
his deal. And you and I've had multiple friends like that have lost their lives way too early. But I look back and I'm like, I was on my own masterminds today for franchisees and franchisors, and I told them a bit more about my friend. And because there's people in my community, my franchisee mastermind, my franchisor mastermind, that are that type of person. They show up for their family. They show up, not trying to make more money all the time. Like they have their priorities straight, and it's so uncommon out there. You
That's
are
beautiful.
one of those guys that live that as well. You and I both do that. That's why we get along so well. But that's why we do all of this stuff. So
That's right.
talk about passive income. Like, what's the definition of passive income? How do you see it? How do you go from active income to passive income?
Well, I think that there is a trap, and you got to be careful because not all passive income is truly passive. I think we know that earned income is your highest taxed income. So maybe it's the least friendly type of income, but it's the income that most people make their living by. It's what most people, earn. And I think if there's a way to shift away from that, you can end up keeping more of your money. Obviously, there are tax strategies out there for earned income. There are a lot more for passive income. And so I do think that, as you can learn to separate time from money, I think that will serve anyone, really well. For me, it's been wonderful. Now, that doesn't mean that you don't do the work ahead of time. I mean, I do a lot of work to make sure I'm investing well. And then I do a lot of work also to make sure I'm tracking where the investment's going. Um, and so I do think those are important, but I really like earning money from a number of different categories that so it's not all concentrated. I don't want to have concentration risk where all my passive income's from one deal or one company, one sponsor. So I want to have multiple different pools that I earn from, but I truly want to earn it with no strings attached. I don't want it to be a time, an equation of I spend this much time to earn this much in money. So in my world, it shows up whether I'm working, not working, vacationing, not vacationing, sleeping, however you look at it. Like that to me is my truest definition of passive income. And but even for people that get started with real estate, I remember early on I was like, oh, passive income's great, and then I bought more real estate, and I was like, oh, this is really cool, and then I bought more, and it was like, oh, wait a minute, I have to work a lot harder now because now I've got like I need to build some teams out. I need to like manage this better. And so what was passive ended up, you know, being, it'd still be considered for tax purposes passive, but it required work and it required a lot of work. And I had to figure that out. I had to figure out the systems, the software, the people, um, to be able to turn it back into passive income. So it's one thing when it's your real estate and it's deeded property and the buck stops with you. It's another thing when you have a true world class sponsor that is a great operator that runs the day to day.
Think back to your podcast now, because I want people to listen to your podcast. But are there some sponsors, some deals, some strategies, some people that they should go back and listen to certain episodes, or they're like, I'm really wanting to learn about some of these opportunities out there to invest? Do you have any podcasts out there that people can Google or get into Chat GPT and start learning about, so they can like get into your podcast world?
Yeah, I mean, I think so. I'm going to be careful not to recommend any specific person. I don't want to recommend who people should invest with, but I think Hans Box is an incredible educator. He and I have partnered on a lot of things. You know Hans really well. So I think he is great at teaching. He and I have invested in countless deals together. I mean, I don't know, 30, 40, 50 deals, something like that. So I know how he works. I know how he thinks. I know how conservative he is. And so from the standpoint of like education, we even have our, due diligence course, our vetting deals course that is, really, I think well done. One of the best products that we've ever delivered as a company for Lifestyle Investor. So I think anything you do to learn and educate would be really important, but you can see the different sponsors that I've had on the show, and you'll find that some people are in industrial and some people are in self storage and some in multifamily and some in mobile home parks. So, we're all across the board. And I think you get an idea of what asset classes you like to invest in. And, I'll probably just keep it at that. I think people need
No,
to
I
do their
think
own
that's
homework.
perfect. That's what I was looking for, because I wanted you to give not necessarily names of sponsors. I opened it wide so you could go however way you wanted with that, but I wanted some asset classes that you just mentioned, and I want the audience to know, like, you talk about those on the podcast. And I think Hans, like you said, he's super good friends with you. He's good. I'm good friends with him, and I just have so much respect for him. He's a guy that I reach out to if I need to be told no on something. He's told me no, and he saved me a lot of money. So I
That's
appreciate
right.
that. Didn't like it
And
at
he
the
says
time, but
no a heck of a lot more than he says yes. And you
yeah,
got to
and to
appreciate that.
himself on his own deals. So
Yeah.
like, but the point of all that is go listen to the podcast and listen to other podcasts out there just on asset classes. But to Justin's point, like, big warning, just because there's someone that you respect, even if it's Justin Donald or whoever it is, there you respect them so much, they will bring people on their podcasts, and I do it too. I'll bring people on the podcast. It doesn't mean I think every deal is a deal that you should do or a brand you should
That's right.
invest in. Like, you
That's right.
listen, but you listen to learn, and then you do your due diligence. Don't listen to a podcast and think that's your due diligence, right?
Well said. I love that. Well said.
All right. What else, as we wrap up, anything else that you want to talk about, like between active and passive? And I know you have a event coming up, which again, I'm telling
Yeah.
all my friends they should be going to, but like, maybe talk a little bit about what that event is going to be like. And then I might have another question or two based off of who's going to be at that event and kind of the discussions that you're going to have there.
Yeah, I mean, it's May 4th and 5th here in Austin, and the whole theme of the event is the transition from active income to passive income. And so we love the idea of helping people navigate that journey. And we're going to talk about, the different type of taxation that exists in each category, why it makes sense to at least have some diversification in the type of income that you have, ways to do it. We're going to spend some time on mobile home parks because that's how I got started. So it's always, a little bit of the story, but we've got some legal professionals, some tax professionals. We've got just a lineup of incredible people that are going to be there to teach over each of those days. And I can't wait. It's going to be a blast.
What would you have done differently? Like, would you have done anything differently with some of those early investments that you did I'm not looking for war stories or anything like that, but like, is there a mindset change? Is there something you would have done differently from an educational standpoint, or a friendship standpoint, community standpoint? What would you have done differently to get where you are today faster?
Well, I wish I would have started investing earlier. I wish I would have been more intentional about my network and the experts in it earlier. I wish I would have sourced more experienced operators and sponsors earlier on in my career versus just investing with whoever I had access to. So, I mean, those would probably be the big ones. Start early, really work on my peer group and my mentorship as soon as possible, and really try to find industry experts that I can invest with and not sacrifice, because I don't have the connections or didn't back then, not sacrifice those dollars to get in any deal, but actually wait for the people that have the best track record.
So I'll say this before we wrap up. There are big conferences that you can go to, and they're great. I go to big conferences and I try to just talk to a lot of people. In franchising, a big conference is the International Franchise Association. I'll be out there in Vegas next week. Big conference, big speakers, all of that. I'm there for the relationships. Another conference called Unconference, friend of mine, Lane Fisher and Brad Fishman, put that on. Most of the time you're skiing in Park City, and then you have meetings at night, maybe a meeting or two in the morning, and then you have access to all kinds of people on the chairlift because you're with them skiing all day long, which is the best. And that's how I really got to know some of my great friends and mentors in franchising. So that's a place to go learn and really build deeper relationships. That is what this active to passive event is that Justin has coming up. You're going to have access to Justin. I'll be there. Hans, I believe, will be there because I always see him at everything. And the speakers are there
he's
talking
speaking.
to everybody.
He'll be there. He's going to dissect a deal. So
Yeah.
he'll definitely be there.
So when you're thinking about conferences, and when Justin said, like getting access to the right people, just when you're thinking about registering for different conferences, understand what you're getting into. But that active to passive one that you're doing will be that. I think every franchisor should be at the Unconference skiing with me in Park City. All right, Justin, any last bits of wisdom before I go play some pickleball?
Yeah, just what I say at the end of each of my podcast episodes. Take some action on something. Pick something that you can move forward with, and really, do your best to pivot from a life by default or on default to a life by design. So if there's something that resonated that Erik and I talked about today, just put it into play. Even one small thing, just take one step in the right direction.
Dude, I'm really disappointed in myself because that was really good. I was thinking, I need to say something funny. I need to rib him on something, but I couldn't think of anything. So I'm just really disappointed in myself on that. All right, man. Thanks a bunch.
Hey, good to hang as always.
Thanks for listening to the Franchise Secrets podcast. Links to everything can be found over at franchisesecrets.com. And if you want my help with anything from starting your own franchise to growing your current franchise business, please visit scalablefranchise.com.